A petty cash fund is a small amount of cash held on hand by an organisation to pay for minor expenses. Money is taken out of the petty cash fund to pay for items such as stationery, taxi fares, and other miscellaneous expenses. Petty cash is usually kept in a small tin and looked after by a nominated custodian of an organisation. The fund is designed to eliminate the hassle of having to fill out staff reimbursement forms and drawing cheques for small, unnecessary purchases. Internal controls must be implemented to all businesses with a petty cash fund. These internal controls are to make sure that the cash is used in an appropriate manner. Inappropriate ways that petty cash is commonly used include paying for taxi fares for personal events or paying for non-business related purchases. Some of the internal controls that must be implemented include nominating a single custodian to be solely responsible over the fund so that at the end of the month any discrepancies can be traced back to that one sole person. Another control that must be implemented includes making sure that staff have adequate documentation after making purchases using the petty cash fund so at the end of the month the till is able to be balanced and replenished with the proper amount of money owed. Along with this, a record for who takes cash out of the petty cash fund and how much they've taken is essential to ensure that no cash is ever missing. In order to combat the unlikely event of the nominated custodian stealing from the petty cash fund, the reconciliation of the fund at the end of the month should be taken out by another employee of the firm. Now on to how the petty cash fund is established, how payments are made out of it, and how the fund is replenished at the end of the period. First, to establish a fund, we must debit our petty cash and credit our cash at bank in order for a company to establish this fund. This amount is usually between $100 and $300. Then, with approval, employees are able to make small purchases using the cash from the fund. These can include office expenses such as stationery or other small items for business meetings. At the end of the period, journal entries are then made for all of the different expenses incurred. All expenses must be debited as they are increasing, while the petty cash must be credited as it is decreasing. If there is a discrepancy between the receipts in the petty cash box and the amount of cash missing, we must debit the temporary account of cash over and short. If in the situation that the petty cash fund has more money in it than what is in the receipts, this account can also be credited. Once the fund is replenished, we start at the beginning by crediting our cash at bank and debiting our petty cash fund.